Hello, and welcome to a fifth video on how to use crypto pandas. Today we're going to be using crypto pandas for an interesting purpose, which is to understand the difference in prices between the various symbols of an asset, such as BTC. Now, BTC is not only traded on spot contract, you can also trade it on futures with delivery contracts, as well as perpetualized contracts, which are both USD and coin marginalized. Now, understanding the difference in prices between these different assets is a very good indicator as to what the market believes the price BTC is going to evolve to, and can help you a lot in your trading strategies. So let's dig into it and make this analysis. Now, to get the data we need, we're first going to import our libraries, including Pandas, CCXT, and Crypto Pandas. We're then going to initialize a Pandas exchange, such before loading our necessary markets. Now, we're going to filter our markets data frame for all assets where the base is BTC and the quote is some form of USD token or USD. And then we can go and get our data for our open, high, low, close, as such for all our different symbols. We merge the markets data onto our symbols so that we will be able later to differentiate between future spot and perpetuals, and also between contracts which are coin marginalized and USD marginalized. We also calculate the spread that each asset has with regard to the spot price by filtering out the data of the spot price and then adding it back to our main data frame as such. We can then go about creating a plotly figure using the make subplots function with both a y1 and a y2 axis. Now, this is going to be very nice because it's going to allow us to plot both the exact price and the spread of the asset with regard to spot. And then we can go and plot our prices for our different assets. We're going to loop through them using this group by, and then add a simple line plot using the go scatter function from plotly. As for the standard spot price, we're simply going to be plotting it on the right y-axis, not the left y-axis, which we use to plot the spread of all the other assets. Once we have plotted our prices and spread, we can plot our volume as such. So we're going to do this in the figure which is beneath our main price figure, and we're going to be stacking the volumes for each token one on top of the other so that we can see which assets are traded the most and which are traded the least. And then we simply update our figure to make sure that we have a nice title, proper legend, and all our axes are properly labeled. And that's it. You've created in 100 lines of code an advanced figure which is going to show you the prices and volumes of 5 different BTC assets over a period of time. So let's go ahead and have a look at what this figure looks like. And there we have it. So we have this really cool looking plot which plots our various spreads and price for BTC as well as the various traded volumes. Now, we've seen a big push on BTC these past few days. BTC went from 100 to 118,000 US dollars recently, and we can see that a lot of this volume has been traded on the futures perpetuals. As we can see here, this big blue line corresponds to the BTC USDT contract. We've also seen a fair bit of volume on the spot orange box, so that's the BTC USDT contract, and some USDC based contracts as well. If we were to look at prices, what is interesting to look at is that we see 3 groups of various prices. Now, at the bottom are the spot based contracts, where of course the various spot based contracts tend to always have the same price with regard to one another. Regardless of whether they are traded using USDT or USDC, they tend to have the same price. Now, what we do notice is that futures contracts, so that is to say the ones with specific deliveries, they tend to trade a little bit higher. And the reason why they trade a bit higher is because compared to the perpetuals, they don't have a funding rate. So that means that people who go long do not need to pay in order to take a long position. That said, the position will need to converge with the spot price at delivery. And we see that contracts which will expire end of September are trading at a premium of $1,600, and contracts which will expire in December are trading $3,800 above the spot price. And that means that the market believes that BTC will probably increase by another $1,500 between now and September, so that is in 2 months from now. And until December, people believe it's going to increase by another $3,800. So rather bullish sentiment in the market. When we look at the perpetuals contracts, we notice that they are also trading in line with spot. And the main reason for that is because the funding rate is there and doing its job of keeping the perpetuals contracts in line with the spot. And that is how you analyze the various prices of an asset and plot it in Plotly. Now, I hope you liked this video. I will be linking the code for the GitHub right below in the video, as well as the various resources you can dig into as to how you can use CryptoPandas. We hope you found this useful, and we hope to see you in a future video.